Welcome to our course on Deriv MT5. In this lesson, we'll explore how to use indicators on the Deriv MT5 platform to enhance your trading strategies. Indicators are vital tools for analyzing price movements, identifying trends, and making informed trading decisions. Please note that all explanations and examples provided are based on the Deriv MT5 desktop terminal. Some features and illustrations may not be available on the web terminal and mobile application. An indicator is an essential tool for technical analysis, providing traders with signals to make informed trading decisions. Indicators work by mathematically transforming price data to forecast potential market movements. This transformation uncovers patterns and characteristics in price dynamics that may not be visible to the naked eye, enhancing your ability to analyze market trends and predict future price changes. Indicators on Deriv MT5 fall into several categories. The primary ones are trend indicators and oscillators. Trend indicators help you identify the overall direction of the market and spot potential trend reversals, though they often work with a slight lag. Oscillators, on the other hand, are designed to signal potential market reversals in advance or in real time. Another category of indicators focuses on volume. In the Forex market, volume indicators measure the number of price changes within a specific time frame. For stocks, they assess the total number of trades executed, either by the number of shares traded or their monetary value. This helps traders gauge market activity and potential price movements. Another important category is Bill Williams indicators. They are a set of technical tools developed by Bill Williams to aid in market analysis. These indicators help traders identify trends, potential reversal points, and market momentum by analyzing price movements and market psychology. They are designed to be used in conjunction with each other to provide a comprehensive view of market conditions. Deriv MT5 offers 38 built-in indicators with many more available as custom add-ons. You can access additional indicators from the code base or purchase them from the market, where thousands of ready-to-use tools are available for technical analysis and automated trading. The easiest way to apply an indicator is by dragging it from the navigator window. Alternatively, you can use the indicators option in the Insert menu. Now, let's explore some of the most popular indicators in these categories. Learning how these indicators work and how to use them can greatly improve your trading strategy. We will begin with trend indicators. The moving average is a key technical indicator used to smooth out price data and highlight trends by averaging prices over a set period. This smoothing helps identify the direction of the trend and can signal potential buy or sell opportunities. There are four primary types of moving averages. Simple moving average calculates the average price of an asset over a specific number of periods, giving equal weight to each price point. This straightforward method provides a clear view of the average price over time, helping traders to understand the overall trend. Next, the exponential moving average. They assign greater weight to recent prices, which allows them to react more quickly to market movements. This makes it a useful tool for capturing the current trend more effectively. Exponential moving average is more responsive to recent price changes compared to the simple moving average, which applies an equal weight to all observations for the period. Smooth moving average is similar to the simple moving average but applies extended smoothing. This means it reduces short-term fluctuations and noise, offering a clearer picture of long-term trends. It helps traders focus on the broader trend without being distracted by short-term price swings. Lastly, the linear weighted moving average that assigns more weight to recent prices, with the most recent price having the highest weighting. Each prior price is progressively weighted less, with the weights decreasing in a linear fashion. This approach makes it more responsive to recent market movements, helping capture trends while smoothing out short-term fluctuations. Traders often compare the moving average with the current price to identify potential entry and exit points. For example, a price above the moving average might signal a buying opportunity, while a price below could indicate a selling point. Moving averages can also be applied to other indicators to enhance their effectiveness. Now that we have covered the moving averages, let's move on to another popular trend indicator, Bollinger Bands. Bollinger Bands are designed to measure market volatility and provide insight into potential price movements. They consist of three lines, a central moving average, and two outer bands plotted at a certain number of standard deviations above and below this average. The key advantage of Bollinger Bands is their ability to adapt to market conditions. When the market is more volatile, the bands widen, allowing more room for price movements. During periods of low volatility, the bands contract, indicating a narrow trading range. Traders use Bollinger Bands to identify potential breakout opportunities and gauge the strength of trends. For instance, when the price moves outside the bands, it may indicate an overbought or oversold condition, signaling a potential reversal. Additionally, if the price consistently touches one of the bands, it can suggest a continuation of the current trend. Now, let's explore the Average Directional Movement Index, another powerful trend indicator. It is used to measure the strength of a market trend. It has three parts: the ADX line, the plus directional indicator or plus DI, and the minus directional indicator minus DI. The ADX line shows how strong the trend is, while plus DI and minus DI show the trend's direction. For example, if plus DI is above minus DI, it means the market is likely going up, suggesting a good time to buy. If minus DI is above plus DI, it means the market is likely going down, suggesting a good time to sell. A high ADX line indicates a strong trend, making the signals from plus DI and minus DI more reliable. Now, let's explore some of the key oscillators available on Deriv MT5. Oscillators are essential tools for identifying potential market reversals and overbought or oversold conditions. They help traders make informed decisions by highlighting areas where prices might change direction. We will start with the two most popular oscillators. The Relative Strength Index measures the speed and change of price movements to identify overbought or oversold conditions. It oscillates between 0 to 100 with values above 70 suggesting overbought conditions and values below 30 indicating oversold conditions. This helps traders gauge the strength of a trend and potential reversal points. Next, the Average True Range. This is a technical indicator that measures market volatility. It was developed by J. Wells Wilder to help traders assess how much an asset typically moves within a given period. Unlike other indicators, the Average True Range does not indicate trend direction, but rather the degree of price volatility. A higher value suggests more volatile markets, while lower value indicates calmer market conditions. Now, let's explore the volume indicator. The most common indicator is the on-balance volume. On-balance volume measures buying and selling pressure by adding volume on days when the price closes higher and subtracting it on days when the price closes lower. Rising on-balance volume indicates increased buying pressure and a potential upward trend, while falling on-balance volume signals increased selling pressure and a possible downward trend. Divergences, such as when the price rises but on-balance volume falls or vice versa, can suggest a potential trend reversal. Lastly, let's explore the Bill Williams indicators. These tools were developed by Bill Williams to provide a unique approach to market analysis, focusing on market structure, trends, and potential reversals. Among these, the most popular indicator is the Alligator. Alligator helps identify the direction and strength of a trend. It consists of three moving averages called the alligator's jaw, teeth, and lips. When the jaw, teeth, and lips are aligned and spread apart, the alligator is said to be awake, signaling a strong trend. When the lines converge or tangle, the alligator is sleeping, indicating a period of consolidation or low volatility. This indicator helps traders stay in line with the market trend and avoid false signals during sideways movements. Once you have applied these or any other indicators, it is important to know how to adjust their settings to match your trading strategy. On Deriv MT5, you can easily modify the settings of an indicator you have applied. To do so, simply right-click on the indicator. The context menu provides options to manage your indicators, such as the indicator properties, deleting the indicator from the chart, removing the entire indicator sub-window, or accessing the indicator list to manage all indicators currently applied to your chart. Customizing the appearance of indicators on Deriv MT5 is quite straightforward. You can set up the indicator parameters when applying it to a chart or adjust them later. By selecting the indicator properties, a new window opens the several tabs depending on the indicator chosen. Let's start with the Parameters tab. The Parameters tab lets you apply the initial settings of the indicator you choose alongside with the indicator line color, width, and style. The Levels tab assists in adding, editing, or deleting levels and adjusting their color, width, and style. The Visualization tab allows you to control which time frames the indicator is displayed on. The Scale tab in Deriv MT5 allows you to control how an indicator's values are displayed on the vertical axis of the chart. It provides option to adjust the range of values shown, ensuring that the indicator is scaled appropriately for better comparison with price movements or other indicators. You can also fix specific values on the scale or choose to inherit the scale from another indicator, making it easier to align and compare multiple indicators on the same chart. This customization helps in better visual analysis and interpretation of the data. Lastly, the Colors tab that allows you to individually configure the display of different elements for indicators like alligators. In this lesson, we have covered various indicators on the Deriv MT5 platform and how to customize their settings to enhance your trading strategies. To explore these indicators further and experiment with different settings, we encourage you to use the Deriv MT5 demo. This will help you gain hands-on experience and find the tools that best suit your trading style. In our next lesson, we will delve into chart templates and profiles to help you optimize your trading workspace.